Hey friends, Lucian here with the Bullish Bears team. This video is going to be about how to trade bear flags. Now, bear flags are just the opposite of bull flags. Bull flags are a bullish pattern, bear flags are a bearish pattern. So when you're doing a bearish pattern like a bear flag, you want to short it, right? Now, shorting, if you're new to trading, sounds a bit intimidating to a lot of people, but it's actually not that hard. The difficulty with shorting is you have to have a specialized broker that finds shares to locate for you to short. Now, unless you're trading and have the funds to trade major companies like major large cap stocks, if you don't have those funds, if you do, then typically a lot of the bigger brokers, you could find shares to short. But if you don't have the funds or you're trading not a lot of the large cap names, then you need a specialized broker like Lightspeed, Speed Trader, or Interactive Brokers, or Centerpoint. And when you're shorting, all you're doing is just borrowing shares. It's an automated process. It's not that complicated. Whereas if you're going long, you buy shares. So let's say you bought 100 shares of something, you are plus 100 shares. When you sell it and you're back down to zero, right? With shorting, you sell, so you let's say sell 100 shares, so you'd be negative 100 shares, and then you just buy it back. So instead of buy, sell, it's sell, buy. The only difference, again, is you need a broker that gives you shares to locate. That's the only challenge to it. But again, Centerpoint, Lightspeed, Speed Trader, Interactive Brokers, really good brokers for finding shares to locate. So now that I kind of give you the stipulations on what you need to short, then here we go. I'll show you how to trade it. All right. So with a bear flag, you'll see kind of a flagpole, right? Like with a bull flag, you'll have a flagpole up. So you'll see right over here with, that's not really a bull flag. Let's see if I can find one. Kind of moving up, and then you have the flag back down like this. So that's kind of a bull flag right here. Kind of a sideways, that's kind of a sideways bull flag. This is not going the way I want it here with the flags. Okay, here we go. Flagpole up, right? So you have your flagpole up, and then your flag down, right? So flagpole up, flag here. Then you would go long at the break of this candlestick close below here as your stop on a bull flag. On a bear flag, it's just the opposite. You go short. So you would take a short position on this candle right over in here as price breaks below the flag, and then you would use a candlestick close above this candle as your stop. Again, it all depends whether you're trading, shares or options, what your risk management is, but that's typically how you would trade a bear flag. When price breaks below the base of that angular support on that flag, that's when you take your short position, and then you would cover with a candlestick close above the top of that flag. Again, all depends. Now, again, when I say what you're trading, you're shorting if you're doing shares, or, there's option strategies to go short as well. So that's where it all depends, when you're covering. Now, this is like a perfect looking flag, right? You have that angular flag up, but then there's other ones that kind of trade sideways or that aren't as perfect. You'll see stuff like this. This is a pretty decent one. You'll see it kind of moves down right here. It's kind of a flagpole down right over in here. And then you kind of have this flag over out to here. So you can take a short as it went down over here. Candlestick close above here as your stop. So you'll see there's a bear flag above it. And then actually here it goes again. Kind of goes down here, right here. But, they're not always going to be the same, right? So these are actually three nice looking bear flags right over here. Kind of short below here, candlestick close above here. Short on this candle as it's breaking angular support, candlestick close above your stop as your stop. Short here, candlestick close above as your stop. But you'll see stuff like this. This is kind of choppy. Price is kind of falling down right over in here. You can kind of draw it out like this. this one still ended up failing. I like to show stuff that's not as, perfect looking. Something like right over in here, is it going to be a bear flag? Is it going to be a cup? You can see it may be bear flagging, but it could also turn into a cup and go and break out. It can turn into a V bottom. So just because something looks like something doesn't mean that it's just going to, go and do it, right? Or go and do what you think it's going to do. So here's one right here. Here's a bear flag right here, and this is kind of trading sideways, right? So not all flags go up in the air. Sometimes they go and they trade sideways, right? Where you can kind of extend it, so that's where I want to show you. It's not always just like a kind of a move up. Like it's not always going to be like this. Sometimes you get a few candlesticks. Sometimes you get more. But again, find those little trend lines. So you'll see this kind of has angular support going up. This has it kind of trading sideways. And then you have, this is kind of like a weird one right here. Kind of like the move down right over here. And then you kind of had a little sideways move. And then you'll have fake outs, right? That's why I like to teach that it's not always going to be perfect, right? Sometimes you have a fake out. It kind of had a little fake out move drop right here where if you took your short and then it went up right here, and that probably tricked out a lot of people, right? So that's kind of showing you the different ones. Again, you'll see kind of like moves down. You'll see these patterns on all different time frames. Kind of a move up like this. And then you'll see right here, sometimes again, you might only get one candle and then it'll go and it'll move up. That's why it's important to learn those angular support and resistance levels, draw your trend lines, your horizontal support and resistance levels, and always look left and see what's happening. Because again, just because you see a pattern doesn't mean you trade it. You look at the bigger patterns overall, the trends overall, and then put your risk management behind it with whatever your trading strategy is. And you'll hear me saying it over and over again. Trading strategy is very important, but it all comes secondary to price action. And again, I don't mean to beat a dead horse, but it's this important. Candlesticks equal price action, and price action is the foundation to everything when trading and just how the stock market works in general. All these patterns work with trading, but also your 401k, investing, all that kind of stuff. You can see if you learn these patterns, you can see what's happening in the market overall, not just happening with a particular stock. So you can use this for trading as well as seeing what's going on with your 401k and that kind of stuff, right? We're not financial advisors. I'm not going to tell you where to put your money, but if you understand trends overall and understand these patterns, you can see what's happening overall in the market, and then you can discuss with your financial advisor and stuff whether you're going risky or you're going safe, stuff like that, right? So that's why it's important. Learn these patterns, talk to your financial advisor, and make sure that you have a financial advisor that understands this stuff, right? So you don't get burnt when the market has these big corrections, right? That's why candlesticks, so important. Learn them because they are the foundation to everything when trading.